Brad Williams, Frugal Finance Mortgage, adjustable rate mortgage. Working with a lender who doesn't tell you about negative amortization. The question here is, what is negative amortization? Amortization means paying off a loan with regular payments so that the amount you owe goes down with each payment. Negative amortization means that even when you pay, the amount you owe will still go up because you're not paying enough to cover the interest. Your lender may offer you the choice to make a minimum payment that doesn't cover the interest you owe. Think of your credit card. Think of your minimum payments, which is peanuts compared to what's actually owed. The credit card company's going to continue to throw in more interest, more negative amortization, if you will, on your credit card because you're not paying the full amount due on a monthly basis. The same concept holds with your home mortgage. The unpaid interest gets added to the amount you borrowed and the amount you owe increases. Usually, after a period of time, you'll have to start making payments to cover principal and interest. These payments will be higher. A negative amortization alone can be risky because you can end up owing more on your mortgage than your home is worth. This is what happened in the 2006, 7, and 8 mortgage meltdown. People were signing up, taking out these negative AM loans, and subsequently, before you knew it, the market blew up. The owner was upside down. In other words, the loan was higher than the value of the house. Subsequently, it just led to chaos. People just walked away from their homes. They just said, here are the keys, adios. And so they weathered the storm for 5 years, but they survived. And subsequently, the market continued to move forward, as it always does. And the end result is more information related to understanding what neg ams are. Stay away from them, period. If you can't get into a house using a normal conforming loan or a normal adjustable rate mortgage, stay away from neg ams, save more money, put a higher down payment, and don't worry about all the bells and whistles of the lending aspect. Stay very conservative because 30 years is a long time if you have a typical conforming 30-year type mortgage. That makes it harder to sell your house because the sales price won't be enough to pay what you owe. This can put you at risk of foreclosure if you run into trouble making your mortgage payments. Certain loans have payment options that let you pay only a portion of the amount of interest you owe each month. If you only pay some of the interest, the amount that you do not pay may get added to your principal balance. Then you end up paying not only interest on the money you borrowed, but interest on the interest you're being charged for the money you borrowed. This dramatically increases the amount of debt you have and the cost of the loan. Keep your debt from growing. Try to pay down all of the interest and at least some of the principal you owe. Yeah, here's my tip. Avoid neg am. Hold off on buying a property until you are financially sound and don't rush to the market. Don't run into the hype that housing prices are going to continue to skyrocket, so on and so forth. Take your time, be conservative. Comment if you've been stuck in a neg am, how'd you get out of it? Did you refinance? Are you still in a neg am? You're upside down, you don't know what to do. Brad Williams, Frugal Finance. Thanks for watching. Hope that helped. See you soon.